What's up, everybody? Michael and Coco here. You're watching episode 15 of the Weekly Scan. The Weekly Scan. The Weekly Scan is all about finding opportunities in the stock market for the weeks ahead. In today's episode, we will be using technical analysis to review 6 different stocks. Now, as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, please ignore our opinions, because that's exactly what they are, just opinions. With that said, let's go ahead and hop into today's show. Welcome to the computer, everybody. Before we just hop into the individual stocks, I want to just quickly go over the market sentiment and what's kind of taking place from a technical standpoint. If you look here, this is the SPY, the SPY. It's the proxy for the S&P 500 index. The level of 300 is a very prominent area of support, so we're going to have to keep an eye on this. And now why I'm telling you this is because it acted somewhat as a hammer candle, which might represent a bounce point from this point, but it might not. So you got to take this into consideration, and I'll show you how similar that the SPY looks to other charts here. Now, the reason why I'm telling you this is because if you see the SPY on Monday start bouncing upwards, but you see individual stocks moving downwards, that right there will be a divergence that's taking place, which means that if you find an area of support that the stock that you're trading is going down to, and while the S&P 500 is going up, it'll give more fuel to your trade to potentially see some sort of a bounce from a higher point. Now, however, it's vice versa. If the SPY starts heading down lower on Monday and your stock is going up, I'd be very careful for trading the momentum to the upside, because it might just be a very temporary bounce scene. So pay attention to the SPY. I like to look at the 5-minute chart while I'm day trading, but just watch where it goes, because if you see a divergence in the stock that you're trading, this chart could be an indicator as to what might happen in the near future. Now, notice how the SPY somewhat bounced towards the end of the day right here at a very big area of support, which is the 300 level. So it bounced from this 300 level, and if you look back in the history of the chart, there was resistance kind of in that area. So it's kind of a zone, right? It's kind of, I'd say it's more like, this zone between these two ranges from, 2090 to, 300. So that range is going to be acting as a support. So just watch that going into on Monday's open. Now, just so I can give you some clarification as to what I mean, okay, so I ran a little bit of a scan here. I have a beta over 1. I'm looking at the high volume stocks. Look at the similarities between all the charts. Now, it might be hard to see, but as you can tell, there was that very similar looking area of resistance in the back history of the chart. It popped up, and then it created a very similar candle setup. And this is what I mean by it correlates with one another. So if you see, for example, this is BAC, Bank of America, if you see Bank of America start pulling back further, but you see the SPY start heading up, that might mean that the Bank of America, if you look at the next area of support, it might bounce from that specific area and move higher, and vice versa. If S&P 500 is moving lower, but you see Bank of America moving up, that might be, a warning sign saying, hey, it's a negative divergence. Don't play with that, at least to the long side. And then look at MGM, very similar setup, right? Yeah. And then play, another setup. Now, if you follow me on Instagram, here's KEY. I'm not going to go through all of them. They're all very, very similar setups. So I just wanted to really quickly point that out. Let's go ahead and hop into the real weekly scan. All right, the first stock that we're going to be talking about is CHGG, Chegg Incorporated. I just really like this setup. It looks like it wants to break out. Just pay close attention to this trend line right there taking place. You have a nice hammer candle that formed. Obviously, during this portion right here, this is when earnings came out. You saw this nice big bump up, big gap up, power earnings gap, and then you kind of created this bull pull. And now I would say it's somewhat consolidating, so it's creating some sort of a bull pennant pattern. It looks like this wants to break out to the upside. It's coiling very tightly, so keep a close eye on the breakout to the upside. How I'd play this? Well, I would just simply I like speculating that the price is going to break out. You could, wait for the breakout to take place and get confirmation with high volume. You can wait for that, or you can accumulate shares within this tight coil, have a stop loss just below it. So if it does break down, you get stopped out, game over. Or, you accumulate shares at a lower price range and you see the breakout take place, which ends up being a very good risk versus reward setup. Now, just take note that it's a very volatile stock. If you look at the y-axis, this small movement from right there to right here, that goes from $60 to $62.50. So this small little range right here is $2.50 a share. So if you're going to be loading the boat, keep in mind there's going to be a lot of price swings within this. It's a high beta stock. It moves very quickly. So make sure that if you don't want to see that type of volatility in a portfolio or in a trade as far as your unrealized P&L goes, make sure that you lower your position size to make sense for this specific trade. Okay, and that goes for really all stocks. You can look at the y-axis here and just kind of see the gap between the two, and it'll give you a good idea that, hey, the price action moves like $2, $3 per share in a day. That's pretty volatile. So keep that in mind. Let's go ahead and move to the next. This here is ABT, Abbott Laboratories, however you say it. I just see a nice bull flag setting up here, a big one. You can see from down here all the way up to 100. 100 is a nice target area. And then you see it kind of just trend down. And then same thing right here, you know, it's kind of just, boom, just within that kind of channel right there. You can draw it probably even straight like that. I mean, it's, to me, this all looks, that looks just like a bull flag or a bull pennant, whatever you want to call it. So I'd say in this type of a setup, how I would play it is I would also think that the price is going to break out eventually here to the upside. The first target would be about $100, and the price action right now is at about 89. So I think also it can go higher than 100, because sometimes the move of a bull flag, you can look at the pull as a potential indicator for how high the stock can potentially move. Now, going from 61 to 100, that's $40 move. So you can see maybe a $40 breakout in the price of this stock. Now, that is just a rule of thumb. That does not mean it's going to happen. Nothing ever does, okay? There's no certainties in the market. Anything could happen, but you can take that as a rule of thumb that you might see that type of move. Now, that'd be a pretty aggressive move. You can go from 75 to 100. That'd be about a $25 move. So, because you can kind of see that it bumped up and then pulled back there. But just keep that in the back of your mind. You can see a pretty big move take place. Now, obviously, if you want to play the breakout, play it, you know, if it does go out on high volume. You want to see a breakout have high volume, because then it gives you more confirmation that you see a move to the upside continuing. How would I play this? Well, I would just have a tight stop loss. I would probably accumulate shares all throughout this area, and then, you know, just have a stop loss under the 200-day period moving average. Because if it does break down, you know, the next area it could fall to is, I mean, look back in the history of the chart right here. This is actually pretty cool. The 200 moving average is moving pretty flat. And as you can see, this area right here, that blue line, is kind of an area of resistance in the prior history of the chart. And then now when it's resistance and it's broken, it then becomes support. So if the price does come within this range, that could be a very good area to pick up some shares to eventually see the price move higher. So I would have a stop loss underneath that area, which is about $84. I mean, it could be as low as 83. I mean, this is a very fast moving stock again as well. As you can see, looking at the y-axis, it goes from, just we'll look right here, $70 to $72.50. So this little tiny move is $2.50 a share. So make sure your position size matches up for this type of movement and this type of volatility. All these scans are really a beta over 1, which means that they're more volatile. So that's how I play ABT. Abbott Laboratories, I would think that this would be potentially breaking up to the upside, but I would definitely manage my risk just in case if it falls down to the downside. All right, here is WORK for Slack Technologies. This has been on the scanner before for the upside breakout, and it did get that upside breakout. So hallelujah, you know, if you played this and you got to the long position, you definitely made some money on this trade. However, you can see the RSI indicator went to overbought territory, and then we saw a pullback. Now the pullback took place right here. It's kind of forming a bear flag, but this is what I want you to pay attention to. That doesn't necessarily mean it's going to break down. It can, but look at the context of the chart. If you look at the context of the chart, check out this area right here. Basically at $29.50, about $30, I would say that range. it pulled back, which typically when you see a breakout take place, you get some sort of a retest, and that retest right here happened. So we're getting some sideways movement, and the last action day that happened was a hammer candle. This, to me, first off, you have big volume accumulation right there, right, on this day right here. And then you kind of see some sideways movement. So this could just be setting up a base for a higher move to the upside. The target area would be probably, I'd say, right about $38 because you'll have some overhead resistance in that area. And then the price action where it's placed right now does make a lot of sense for a good risk versus reward trade because you can literally enter in shares here, right? Just right in this range, have a tight stop loss, and then your potential reward is all the way up here. So, I mean, this is just a gift for a great risk versus reward setup. You have a nice area of support where the price is at. You have a great target area, and you're not really risking much at all. So, just an amazing setup. Just keep in mind the context of what's taking place in the markets. This can easily break down, right? But I would say it's well worth the risk to play it for the upside, just based on the technicals of this chart. So I think that this one is a good setup. Yeah, let's move on to the next. All right, here we have ticker symbol CLDX, CLDX Therapeutics. We obviously had some big volume come through these days. However, it pushed it all the way into overbought territory on the RSI. So it's typical to see some sort of a pullback happen. Now the pullback looks like it's taking place on a little bit lower volume relative to the big breakout in volume. So really what we're seeing is a potential consolidation. And when you see a consolidation, you want to look for an area of resistance that it can pull back to potentially act as support. So by doing that, what we see is right here, it acted as resistance at about $5.75, give or take right there. So what we might see is a pullback to this range and a potential pop-up to the upside. So put this one on your watch list or on your alerts, because if you see the price action come down here, you can make a really nice intraday trade. You could do a potentially long-term swing trade of this too. This is a pretty fast moving stock. As you can see, these last few days have just been very, very dramatic. From all the way down in one single day, it went from about $4 to $10. So that's pretty crazy to me. So I would just say be patient. Don't just hop into something like this because it's getting a lot of volume and a lot of people are talking about it. Wait for the pullback, have a tight stop loss, and then maybe you just might see a bounce up to the upside. Let's head to the next. All right, so here is ticker symbol GDX. This is the gold miners ETF. I see somewhat of a falling wedge taking place, which is a nice bullish pattern. We did see a nice pullback within this range right here, and a hammer candle formed at the 50-day period moving average, and it's been kind of moving upwards since that point, nice and slowly. So I'm going to be keeping an eye on for a break below the 50-day average, just in case, as an area of support. But really the pattern that I see right here taking place, kind of like that right there is this trend line kind of coiling up. And then if you look back in the history of the chart, it's kind of like that right there, which is, pushing itself to be somewhat of a falling wedge. Might be a little bit of a channel, but I would say it's a falling wedge, which is a very, bullish pattern. And typically when you see wedges form, the tighter they coil, the more aggressive moves that you can see moving forward. So if we do see a break from this point, which I'm a gold bull right now. I am a very big fan of the gold itself and the miners. So I feel like if this does break out of this channel, especially with all the fundamentals that are taking place in the market, it can go from this 32 level that it's at right now, easily up to this $38 range and potentially higher in the very near term future. So I would play this as obviously a long position. I would like to see the price maybe move a little bit lower, but if it does break down to this, break down the 50 period moving average, just play it with caution, because the 50 period moving average is clearly acting as some sort of support for this range. So how would I play this? I would probably just wait for Monday's to take place to see what's going to happen, and we might even see it open above and then start pushing itself higher. If it does come down lower, I might accumulate actually some shares down here and then just play the trend line that I see kind of taking place here, or maybe just potentially just wait it out and go from that point. It's such a nice area of support right here, so it's hard to say how you'd want to play this. You might just want to wait for a breakout or close above and then do it, but make sure that you see it happen on high volume so it's not some sort of false breakout. But I'll be definitely keeping an eye on this one. I always do. I love the miners. So yeah, that's what I have for GDX. Let's go ahead and move on to the next one. Here is ticker symbol TWLO, TWLO Incorporated. I just see this, nice little coiling up pattern, making higher lows, lower highs, getting pretty tight right here. Obviously accumulated a lot of volume right here, probably on earnings season. I've seen this a few times now, so it created this kind of a window, power earnings gap you can call them, or just an earnings gap, or whatever you want to call them. But now it's been kind of just trekking sideways, somewhat low volume, kind of tapering off because it's consolidating. The indicators aren't giving us too much, but definitely pay close attention to this one. You can have a stop loss under this trend line, under this basically 187.53, because that was its most previous high, maybe a little bit lower than that. And you can accumulate shares within this tight pattern, or you can play the breakout. But I would be keeping a close eye on this because it does look like the price wants to break out of that range. That's the last chart we have. Let me just close off again by saying keep an eye on the SPY. You want to make sure you understand where it's going. If the SPY starts crashing down, these type of plays might not see the breakout necessary. So it goes back to what I say every single time, manage your risk. These setups could play out really well in our favors on the long side, or they can just break down. So make sure that when you're setting up a trade, that your entry point and the amount that you risk is about 3-to-1. So you want to risk X amount to potentially earn that amount, right? 3-to-1. Your risk could get entered into 3 different levels here. So boom, it'd be 1, 2, 3, okay? Risking a little bit to potentially earn a lot. That's how you manage your trades. It's the most important part to all of this. If you don't do that, you're just asking to eventually get the market to beat you up eventually. So keep that in mind. That's all I have for you today on the weekly scan. I will see you next week on my live day trading, the SP 500 technical analysis update, or if you just watch the weekly scans, I'll see you next week on Saturday here at the weekly scan. See ya!